Welcome traders to our daily live trading webinar. We call it real-time daily trading ideas, 5 days, 5 traders, and we would like to screen the markets, create some interesting trading ideas and show you some setups. But before we will start, here's some additional information, our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposit. They may not be subtitled for everyone, so please be aware that all we are showing and presenting here is just a personal opinion and not an advice for investing. But here are the good news. Christmas is coming early with Admiral Markets. We have a special promotion. For additional information, check out our website. As I said to the beginning, 5 days, 5 traders. Today is Tuesday, so today with Paul. So later more about Paul and his trading style. Here you can see some additional information for our offers. For example, our bestseller DAX 30 with a typical fixed spread of only 0.8 points during the main trading hours. So if you have additional question or anything, please feel free to contact us. Here you can see our telephone number and our email contact. So also you are invited to check out our YouTube channel. All these live trading sessions are recorded, so you can check out later there on our YouTube channel. So that's it for the beginning. I said hello to you, Paul. Here's some nice picture from you. I hope the sound is well and you can hear me.
Good morning, everybody. I hope you can hear me all well wherever you may be in the world today.
Yep, the sound is great. You have the screen and you can start, Paul.
That's a good start, and I hope that you can all see my screen. Hopefully, you can all see the Admiral's MetaTrader 4 Supreme Edition. So wherever you are, ladies and gentlemen, I hope you're well. Thank you for joining us on this December Tuesday morning. 2007 has rolled through pretty swiftly. And it's been a rather eventful last couple of weeks, and I'm going to talk in particular about some of the activities of yesterday, which some of you may be aware of, some of you may be of interest, some of you may have been trading through. So in particular, we're going to talk about some of those elements with the Brexit negotiations involved with both, the EU, Ireland, and Britain, and how does that play out on the charts. As always, I'm just going to talk through a couple of quick ideas and just have a little check of any questions. Thank you for joining us, Eric. Good morning to you too as well. If you have any particular charts you'd like me to have a little look at, then I'd be happy to do so. Just be reminded that this is a demo, this is a analysis. So I'm very happy to give you a couple of ideas of how I see it, but it doesn't constitute any particular trading advice. But what we are going to look at, I'm just going to quickly start with euro dollar as always, because it's been pretty eventful, pretty interesting a couple of weeks there for us on the euro. We talked about a few weeks about it sort of working its way down, and now as you can see, it's been working its way back up. And what I've been looking at is, this kind of big block here, okay, this block of trading that carried out between about 119.30 to 120.00, 120.50. I see that as, we talked about that being a little bit of a head and shoulders pattern there. This is the daily chart. And as always, I appreciate there'll be people here who are very expert traders joining us. There'll be people who are completely new and beginners. So for those of you who are completely new to trading, let me just say that, my charts are very simple. There's green bullish candles, red bearish, blue 20 period simple moving average, a red 50 simple moving average, and a green 200 simple moving average. Nothing exotic, just very, very simple, just to give me an idea, help with identifying the trend, and maybe give me a little bit of indication of the sort of the speed and the velocity of the trend, and also giving me ideas of areas of dynamic support and resistance. So what I'm particularly interested in is, I think there's a chance we might scroll back up to around about this 119.30 area, okay, and it might surprise you that actually I'll probably look to maybe be a sort of, I'm going to take an aggressive reverse position there around about 119.30. You can see I've used the fantastic Supreme Edition mini terminal tool to be able to just literally sort of place that trade, drop it. You can see that I've got about 70 pips of what would be around 70 pips of trade risk. Okay, so with an order there about 1929, 1928, and a stop just above the 120/100 psychological number. And then I'm looking for a good run down here towards the daily 200 period moving average. One thing I found about, and I think I've talked about in previous sessions, is that if price breaks that sort of 50 period moving average, then there's a chance that it will roll its way down to the 200 as the next level of dynamic support or resistance. So having a stop or rather a target order in front of that is a pretty sensible and logical target to me. And what it also gives me is the opportunity to basically adjust my target just very gently if it takes a little bit of longer to do such things, because of it's a dynamic level of support and resistance. But that's what I'm looking at there at the moment. It's just a case of, I think euro might get back up into that sort of block there, and it wouldn't surprise me if it rolled over and fell down away. So there's always a little bit euro dollar, but in particular, what I want to talk about to you today is the euro sterling. Now, what we had is, yesterday, I'm sure you're all aware that some of the shenanigans that occurred during the day yesterday between the Irish, the British, the European Union with regards to consultations over not only Brexit, but in particular around the border between the Republic of Ireland and Northern Ireland, and in particular a case of making sure that it becomes a frictionless border, as it has been for perhaps the last 20 years in terms of there being little or no checkpoints along the border, and it being very easy for both people and goods to pass back and forth across that, and that has helped bring prosperity to an area that was particularly challenged. So what does that actually mean for us as traders? Well, invariably, all of that sort of the anxiety about that, about whether there is a deal or whether there isn't a deal, will play out in the particular currencies, which is the euro and the sterling. Now, I'm just going to very quickly show you something. If I can drag in one of my own little spreadsheets that you might be able to see. So the reason I show this is that even though I have all this fantastic technology, every Sunday, I take an hour of my day to go through pretty much all of the 28 major FX pairs that I follow and trade, and by hand go through all of the weekly, the daily, the 4-hourly charts for those particular currencies. And the reason I do that is because by doing it, it gives me process, it gives me routine, and it gives me connection to the market, and I identify particular setups and opportunities much swifter. What I'm also doing is, as I've talked many times about, is about trying to identify, where's the strong, where's the weak. I want to be buying strength and selling weakness as a general rule. Last week, we talked about trading the euro Canadian dollar because at that time, euro was strong, Canadian dollar was very weak. I wanted to be a buyer. But if we look here, what I do is a very, very simple matrix that allows me to work out who's, of the 8, who's the strongest, who's the weakest. And at the moment, euro has been the strongest and sterling is the second strongest. So actually what I've got is I've got a mix of, number 1 and 2 on my currency strength matrix. Why is that important? Well, what happens is when I look at the charts, when I look here, this is the weekly chart of the euro against the sterling. Well, what you can see for the last few months, really, okay, for the last few months, for what we've seen is the euro sterling has actually just been contained in a range there, all right? It's just been backing back and forth. Okay, that's not unsurprising when you have number 1 and 2 on the sort of currency strength matrix. What I said is I want to be buying euro and buying strength, selling weakness where possible. But if both those currencies are strong, it's like 2 rivals butting heads. Furthermore, what we also have is, we have the Brexit negotiations going on at the moment, and I think kind of yesterday was, let's say, the start of some of the challenges, some of the fights within that. And so, of course, euro sterling has, just is a little bit sensitive to that at the moment. But I see that still at the moment, euro sterling is in a range and it's just backing back and forth. So invariably, that offers us opportunities at the moment. All right, that offers us, a chance to be a range trader within that until such time it breaks out. That's the thing about a range. It will invariably break out at some point. We may not know, technical analysis may give us an idea, but actually what we're looking to do is just to trade what we see. And at the moment, what we see is the fact that, the market is just knocking back and forth. So if I go down into sort of the daily chart there, here we go. You know, I'm just looking at that, okay? And since September, as I said, it's just really, you know, for the last, what's that about, the last 12 weeks or so? You know, so maybe just under 12 weeks, it has literally just knocked back and forth. And if you're a range trader, well, that presents some super opportunities. What we can see is that when price gets down to that kind of lower level, let's maybe just tighten up our levels a little bit here, okay? When we're getting down to the sort of the area of around about 87.50, price has, you know, invariably bounced off that area the last few times. When price has been getting up to around about the 90 level, okay, nice psychological number there. Price you can see has sort of trailed down there a little bit. So just tighten that up. Every time you go down a time frame, it's a chance to sort of tighten up. So, you know, what do you think my trade idea is at the moment? Well, not surprisingly, you know, I want to, at the moment, as this range carries on, I want to be a seller at the top of the range and a buyer at the bottom of the range until such time that price and market breaks out and moves in a particular direction. So let's see if we can, you know, sort of start to use the fantastic tools we've got here. All right, here's the mini terminal. All right, I'm just going to bring that on to my euro sterling chart. And as I said, you know, what I'm going to be looking to do is, you know, just put a sort of a position on here in the sense that, you know, whenever I see price coming up to the sort of top end of the range, I want to be a seller with a stop just above it. Okay, just above those recent highs. And I want, you know, to take some profits down towards, you know, about 2/3 of the way down. I'm not looking to be greedy. I'm not trying to squeeze blood from a stone. I'm just looking to sort of just effectively try and have an element of that there. So there we have, there's the top of the range covered. And not surprisingly, I want to have a little look at the bottom of the range. And you know, in particular, I was looking yesterday at what, you know, what we saw in the with regards to, let's say, some of those shenanigans that occurred. I'm sure you've all watched the news. And what we had yesterday is, you know, price fell down all the way, then it came all the way back up. In England, they have a song called the Hokey Cokey, in, out, shake it all about. And that's what we've had a little bit over the last 24 hours of the euro sterling. But, you know, what I'm interested in is that, you know, if price clearly, this sort of level here, 87.50 just beneath, is clearly there's a level of support. So, you know, I want to be a buyer at the bottom of that range. Well, invariably, you know, what I'm looking at for maybe a shorter term trade is to be a buyer just down here at the sort of the bottom end of the range of what we saw yesterday, the stop just beneath it there, okay? And maybe we'll have a look at, you know, a first target, okay, of the you know, the sort of the recent highs of yesterday. Once again, that gives us, you know, you can see there yourself, you know, for the long side on a short-term trade, that gives us a very nice reward to risk on our trade, okay? And we're just, you know, we're just trading what we see. Trading what we see. You know, yes, of course, we'll expect the market to break out of that range at some point, but at the moment it's in it. Once it breaks out, well, then we'll form a new trade plan, you know, in accordance with that. So there you go. I hope that gives you a little bit of interest, a little bit of insight to see how, you know, understanding currency strength, okay, is very important. How that currency strength from you know, you can get the plugins, you can do it yourself. How, you know, the actual taking the time to have your own routine and process to sit and draw and write makes a big difference. And then actually seeing, you know, how does that, you know, sort of translate itself into the picture on the chart? Well, you know, you can see there we've had that example. Euro and sterling are actually quite strong, all right, so, you know, relatively to the other currencies, and that shows out in that, you know, we've just the euro sterling has just been batting back and forth. I've undoubtedly we will get some more, let's say, interesting news announcements out over the next couple of weeks as we roll towards the I think it's the EU meeting on the 14th of December. But, you know, what we have is we have a simple trade plan there, okay, looking at the bottom of the range to be a buyer and at the top of the range to be a seller. So I hope that gives you some insight to look. I'll just have a look if there's any questions there, you know, we can have a look. Derek, as Eric has asked me for the DAX today, yeah, I'll have a quick look at that for you, Eric's. And Albert asks, you know, what is the use of fractals on the chart? Yes, that's right. That's one of the other things I have on there. Just very quickly, you might be able to see that, you know, these sort of small little triangles there, you'll see little applets, maybe they'll be called. You can find them on the platform. It's insert indicators down to Bill Williams, and there we have fractals. Billy Williams wrote a book about trading chaos. Fractals are part of that. If you don't know what a fractal is, you know, when you get an up fractal, it means that high of that candle is higher than the two candles before and the two candles after. And when we have a low, you can perhaps see a low fractal there. That means the low of that candle is lower than the two before and the two after it. So, you know, what's the reason for it? Well, it gives me an indication of where are particular levels of support and resistance, supply and demand. When I start to see them at particular zones and areas, that starts to give me, you know, a little bit of interest in terms of, you know, what's going on there. So let me just quickly sort of, I've got one there. So we have, let's just make that a little bit bigger, shall we? You know, so you can all see it at home. Let's have that there. There we go. So here we go. So there was one there. Hopefully you can see that there's an up fractal there, and then there's one there, and one there, and one there, and one there. Okay, all that's doing is Albert is giving me a little bit more, you know, confidence that that level, that kind of 90 psychological level, is not surprisingly, you know, very important, because every time price has moved up to that area, it's fallen away. Every time it's moved up, it's fallen away. Just a little point about fractals is, remember, that fractal isn't properly printed until the two candles afterwards. Remember, for an up candle, it has to be higher than the two before and the two after, and a low candle has to be lower than the two before and the two after. But you can see yourself there, you know, if I just do it here, okay. Not surprisingly, you know, we had quite a few here. Okay, you can see seven. And, you know, it just, when you're looking at a chart, it very quickly draws the eye towards areas of particular interest to me. Okay, there we go. So, you know, there is not a fractal there right on the edge of the, you know, even though we had a, even though we've had a low there, because what we need is, you know, today's candle and tomorrow's candle. If they are higher than the low, then what will happen? One will get printed there. But all that's doing is giving me just further indication that this block between about 87.50 and 90 is important, and within that, you know, I'm looking to sort of have some trade ideas within that. So I hope that answered that question. Let's have a look at, I think Eric wanted a quick look at the DAX. Let's have a little look. We've had a bit of an interesting morning already, haven't we, there on the DAX. So here's the daily chart. This is you know, the simple new chart here. Okay, you know, we talked about this, didn't we? Sort of, you know, the last week or two, that you know, it's kind of looking like it's been coiling up a bit. It tried to make a breakout in the last day or two, but it's just it's been a little bit how would you describe it? A little bit feverish. All right, you know, it's those levels. It's kind of it's flattered to deceive. I think it's maybe the way that every time it gets up, it's falling back, or every time we think it's getting out of those kind of areas to the south, it's fallen. It's come back up into that range. I see that, you know, we are still sort of, you know, looking at that. We're still knocking about there around the 1350 level. Okay, that's, you know, you can see that the averages are not really giving you any help. The averages and the price are together. They're all together. Kind of one little bit of insight is that, you know, when price and all of those averages are together, it's like cluster. It's a sign things are sort of coiling up, and invariably think of it like when you sort of try and put two of the same ends of a magnet together, they kind of repel each other, and that's a little bit like what happens here when you get moving averages and price all together in one spot. Then actually they repel themselves, okay, and force themselves apart. But at the moment, I'd see that, you know, not really, you know, it's just knocking about within a very tight range, even between about 13,000 and 13 sort of 90. Okay, it's definitely a sort of 100 pip range today. Okay, and it's just coiling up from what it is from what we saw yesterday. So nothing terribly exciting there for me at the moment. I'd be looking to be interesting to be a seller up at the top of it, and a buyer down at the sort of bottom of it around about 13.10. Okay, that was very, very quick. I hope that helps you, Eric. I hope that give you a little bit of insight there, Albert. So I hope that helps there. If you have any other questions, you know, I'll quickly take them. Other than that, I wish you the best of success in your own trading for the next week, and I'll speak to you soon. Thanks.
Okay, Paul, thanks for you screening the market and showing us some interesting trading ideas for today. So yeah, thanks to all the listeners. Today we have in the evening another live trading webinar. It's in German language, so yeah, if you can speak or German, you are always invited to. So you get the link on our website. For that, it is. So thank you all the listeners again. So see you tomorrow at the same time. And thanks again, Paul. So see you tomorrow. Bye.